Let's take a look at Opendoor stock. Had a massive move up, I guess some kind of short squeezing as people have been betting on falling prices for some time, and the stock was re-rated to the upside. Where can we expect the stock to be going now though? Let's take a look. So if I were to draw in a parallel channel, I'd be taking the lows down here that we had that marked the start of the parabolic run, and I would be drawing this up to these sort of levels here where you had the stock topping out. And to me, this looks like the kind of parallel channel that the stock has been respecting. Now, it didn't last very long. You would have hoped for a bounce around the $5.5 level, but it seems that price was unable to hold that level and did break down from that point. So that is a bit of a bearish sign. It means the uptrend that you had here going on was not able to continue, and the stock therefore not able to go meaningfully higher, as high as perhaps $15 or so. Instead, we're trading in this sort of range. We're consolidating in this area. You would expect the next move to be a retest of this parallel channel around $6.7 if you're bullish on the stock. If you are able to get back up there and break back into the parallel channel, then you could be able to potentially go all the way to the top of the parallel channel and reach some, pretty high prices. That being said, generally when a parallel channel like this does break, when you have a strong level that should have been good support and it does get broken, that is typically a bearish sign and signals that you should expect more downside to come. So I would expect, even if you do come up and retest, that you will most likely be rejected from there and end up coming back down on the stock, perhaps to some rather low levels. Although, of course, how low the stock can go is going to depend on how it's doing in terms of the profits and trajectory and the growth and all the rest of it of the stock. But in some way, I sort of wouldn't be too surprised if you could actually come all the way back down to these sort of levels that you did break out from in the first place, something around $0.9. That wouldn't be the most surprising thing, particularly because you have left a lot of gaps down here on the chart. You can see there's gaps here, here, and here, which may eventually be filled. And if they were to be filled, you could see Opendoor coming back down to these levels. Now, that would in fact be as much as an 80% move down from where price is currently trading at, which you've got to wonder, is that even the most realistic outcome? Maybe not. Maybe you're more going to chop around here. You've put in a bit of a low around these sort of levels. Maybe that will be support in the future again at around $4, $4.1, something like this. Could also see you going to maybe $3 and having that as quite a strong level on the stock. So this would be how I'm looking at the stock at the moment. If we take a look at the trend, we can see that we have had this massive parabolic move up. We've entered a bullish trend, but you couldn't really maintain that, and it is now potentially in danger, the trend of flipping to bearish. If that were to happen, then you could see, again, an extended sort of bearish period as we had in the past. And in that case, the stock may be indeed coming down to around $3 or even as low as $0.9 in a worst case scenario. Maybe the more optimistic target would be these sort of levels around, $1.9, something like that. But I would certainly be favoring a bit of a bearish look at the stock currently. If you do roll over further and enter the bearish regime, then it's only probably going to worsen from here. Of course, this is a purely technical look at the stock. I don't have any fundamental view of it. If they are able to turn the business around and make a lot of money, then of course you could re-rate the stock a lot higher. But it's just worth keeping in mind that generally speaking, price does reflect the status of the company. If price is being very bearish and we have broken this level, then to me that indicates that the smart money understands that the stock is essentially going to be on a bit of a lower trajectory and perhaps entering a bit of a bearish trend. We can even draw in a parallel channel here to the downside, which might indicate the kind of trend that the stock is now trading in. And again, that could get you down to these levels that we just talked about. But equally, if you were to come down and tag the bottom of this trend line, that would also probably be a very strong place for a bounce as you had back here in November of 2025, making it back up to the top of the parallel channel. So this is also something I'd be looking at. If you're not able to retest the previous level that I talked about at $6.6, then you may only get as high as sort of this resistance that the stock has been respecting so far. So that's also something to keep in mind. Maybe the upside is only as high as $6 or so at the current time, until you can at least prove that you're ready to go higher and be bullish again on the stock and perhaps break this particular downtrend. So that's how I'd be looking at the stock. Two sort of ways to look at it. You've broken this previous bullish momentum that you had, and you're now trending to the downside. On the bright side, you could even look at this and say, oh, maybe it's a bull flag and you're actually going to explode out of here and have a very nice movement to the upside. That would be the bullish case, that this is just one extended, big bull flag essentially, and price consolidating, waiting to break higher. So while my bias has to be bearish, there is some merit to a bullish stance as well. But personally not a stock I'm necessarily going to be trading. A little bit outside of my wheelhouse in this regard, and no buy or sell signals per se. With that being said, I hope that video is helpful for you guys. Subscribe as always for more daily videos. Macro report tomorrow on Sunday, and I will see you next time. Bye-bye.